The central banks have injected so much inflation into this market. It doesn't matter what industry sector you look at.
What do you mean the central banks have injected so much inflation?
They own a third of all securities in the world, Becky. There's a surfeit of capital chasing assets, and there's not enough assets. So
they're going to start unwinding it, right?
Yeah, but it's going to last for years. The Europeans are still buying, the Japanese are still buying, the Swiss.
Before we sort of just land on the financials and banks themselves, you're a former Fed man yourself. So explain what you think is going on inside the Fed right now. But what is the conversation that they're having, especially when it comes to where you think rates are going to go, because that ultimately is going to affect the rest of this?
Well, I think Chairman Powell has a problem that was left by Chair Yellen as she went out the door, which is that they did too much. They should have stopped after QE2. And then we wouldn't be looking at this market up 30, 40% on an economy that's cruising along at 2 or 3%. You know, the industry banking doesn't grow this fast. And when you see zombies running at 35, 40% year-over-year gains, that tells you something. You should start running yourself. I mean, you know, seriously, I mean, Bank of America was the best performing large bank in the country last year. And it was because of cost cutting and a lot of other changes that made it far more attractive. You know, after 7 years.
Okay, so
they had a lot of work to do at the bank, and they've done some pretty remarkable things.
Yes, but the point is that the growth underlying that business is in no way supporting that kind of gain in the stock.
Okay, so Powell's going to do what, and then let's talk about what that's going to mean for the banking world.
Well, Powell, as he said back in 2012, has to unwind this short volatility
But you just said
position.
he's not going. You just said that the central banks are not going to unwind, or they are, but it's going to take a very long time.
Well, the Fed won't sell. You notice the Congress just confiscated more of their capital with this latest spending bill. They will not take a loss on their portfolio, so they're going to let it run off. But this could take a lot longer than the Fed thinks. They think they're going to have $20 billion in runoff every month. I think they may be surprised at how long it takes, because those mortgage-backed securities they bought are going to prepay much slower than they think. And so it's going to take, 2024, 2025.
Let me ask you a separate question. You were one of the early folks sort of screaming before the last crisis. And you talk a lot about debt and leverage in the system. Is there debt and leverage in the system that we're not focused on right now?
Yes. You had a lot of inferior companies able to raise money at investment-grade spreads. So as spreads widen, we're going to start to see loss rates go up. It won't be a catastrophe, but it will certainly be a drag on earnings. You know, the plus right now is lower expenses, regulatory costs are going down, a little bit of upside from interest rates and net interest margin, but there's no real top-line growth here. I mean, none of these large banks are growing. And if you look at the different loan categories, they're pretty pedestrian compared to, say, 2 years ago.
So who do you like and who won't you touch?
Well, the best value of the top four is clearly Wells. You know, self-inflicted wounds, but dollar for dollar of assets, they're still the best performer of the group.
But how much is there?
You assume there's no, to use Warren Buffett's.
Well, good question.
Are there any more cockroaches?
They offer an instructive example of how boards should not act, which is they did nothing. They sat there, Becky, and did nothing.
But are they out of the woods at this point?
I think so. Yes, they still look.
Does Tim still keep his job?
Good question. You know, the Fed.
What is wrong with the culture at that place?
I just
what is in the water there?
I don't know. They just were not responsive. When the one thing we've learned from the crisis is when the regulators call, you respond. You don't sit there and stare at them, and that's what they did. They made a mistake.
Okay. We're going to leave the who don't you love, just so everybody knows?
Well, everybody's banging the drum on Citi. I've never been a big fan of that franchise. It's just there's not much left.
What about J.P. Morgan?
Morgan at 1.7 times book is fully valued, and the point is Wells should be at 2.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.